thanks a lot today for joining us for this fantastic webinar, real estate and tech, a dual approach to win investors and building a brand. Today with me, I have Daniel from Equity specifically, and I've been knowing him from quite a long time. He's one of our client, and I really wanted to take down to a points where, how basically Daniel has been help out, how his journey has been with this technology aspect. I would really love, Daniel, if you talk about yourself and get going from there.
Yeah, absolutely. So, as mentioned, I've been working with the team now for almost a year, and it's been a great experience. They've been super helpful in building out the digital brand and really helping us grow our business. In terms of what my company does, I'm the CEO of Magnify Real Estate. So, we are a real estate tech investing and brokerage company, and we help arm investors with the information, resources, and tools needed to make smarter real estate decisions and grow their portfolio. So, that's our overall vision. In terms of my background and qualifications, I got my undergrad at MIT. I got my MBA at Harvard. I was working in consulting at Bain for a while. I'm not new to digital strategy because I worked at LinkedIn for a while on the product strategy team. And I also got a lot of exposure in the sports world, working for the Niners, the Rams, and Tom Brady's startup, TB12, doing strategy and analytics, implementing a lot of this type of stuff. So very excited to be on the panel. And I think hopefully I can add a lot of value with some of my background and experience.
Lovely, great, Daniel. So we have a fantastic panelist today, and it's going to be a really great talk altogether, a value add information to each of you. With that being said, I would love to introduce myself as well. So myself, Ramesh Tambe, I'm a CEO and founder of Orion Digital. I have collectively 14 years of experience into digital marketing. I have done my master's in marketing. I have worked 1,000+ businesses so far for theoretic, strategic application and data-driven marketing initiatives. We have worked so far more than 400+ real estate syndication companies. We have collectively generated more than 2 billion of a capital for deals and funds. We are very phenomenal. Our team, Orion, is very phenomenal for implementing cutting-edge AI trends and marketing. Orion Digital is a dedicated team of more than 70+ professionals altogether. So this is what our team and our achievement is look like. That being said, Daniel, on to you. Why don't you get started with Daniel?
Sure. Do you want to ask me a specific question, or you want me to jump into digital marketing overall?
Yeah, I think you can have a question to me if you want, and we can give from there. Or
Oh, yeah, let's do that. So I'll start with a kind of an easy one to get us going. But how important would you say brand building is in real estate investment?
I think, a very good question, Daniel,
Right.
I must say.
Don't.
So brand building in real estate
I
investment.
think
So if we look around, Daniel, in the entire journey, you've been in syndication last 4 to 5 years. How the brand building help today? If anyone, wanted to buy something, they wanted to get into something, every time first thing came into their mind is what is the brand? Do this brand exist? What is that brand value look like? You want to go and purchase something, you want to buy a sports shoe, which is specifically for a gym. You'll go and look for the Under Armour. Under Armour has really created that kind of a brand value out there, okay, which sports people are going and hooking around. Now, if you think about talking about a brand value, any investors today, let's say for example, we have a deal, we have promoted our deal, okay, on the internet, and I got one investor who is coming in into a one-on-one call, and he wanted to talk about the investing opportunity. I pitch him, okay, hey, look, this 20% IRR, 5%, 5 years holding period, cash on cash, tax benefit. This is my track record look like. Daniel, do you think he's gonna invest with you or with me on a day call one?
I
Is the
think I'd
question,
strongly.
yeah? Is he gonna invest?
Yeah,
He's
if you
not.
had it all done.
Yeah.
Yeah. If you had it all teed up, then yeah, but I think you
It's a
need a lot of the components.
Yeah, yeah. It's first call with him. He has no clue. He just saw your content somewhere and joined call for a talking about your what the investment look like. So any investor who wanted to invest along with you, he'll definitely do his due diligence before he coming on the call, or after he meet with you on the call, he'll go offline. He'll do online and offline due diligence. So when you have a brand existing, which could be online and offline. Okay. That is important factor where specifically these investors go and talk about it. So that
Yeah.
exists. See, I go check on Google, I go check on LinkedIn, I go check on Instagram, I go check on review sites, I go check on investing portal, and I see, okay, Magnify Equity has really a great visibility out there. People are talking about your content is visible there. If I want to learn something there, I find the Magnify Equity content, which is talking about investing, a learning kind of a thing. That's the brand existent look like. So the more ever your visibility is, how visible you are, that's how your brand awareness has been defined precisely, Daniel. So 1,000% it is required for, and in today's world, let's not talk about 5 or 10 years back, but in today's world, if somebody wanted to make an investing decision, they really need to have a brand credibility out there. People invest in brand, people invest in credibility, people invest in security, and that's why in today's world, you need this to be created online and offline as well. So it has to be balanced. It's not something just I go all along and I would really I have checked online that, okay, all seems good. Okay, I'm 70% converted for making a positive impact. Oh, I know this guy. Oh, I hear him. He always talk about investing. Oh, I saw his deal there. I saw him on Instagram. I saw him on LinkedIn. I saw him his video on Facebook. Cool. I've read his blog. Yeah, I got his newsletter. Constant. This is brand impacting. Constantly coming across on the eyes of those our targeted audience. That's how you leverage brand. That's how brand is being built out. And it takes months and months, years and years to build out that brand because brand cannot be built over a night, over a days. It's definitely take time. If you push whole lot of a big money, then you can build out a brand over a period of couple of months because you push lot of content out there, and with that content you got a lot of visibility, so people starting knowing about it. So I think
Definitely.
it's
Yeah.
much more important in today's world. If you are into the investing business, not only in investing business, you are into the any business, you really need to have a brand existing. Two things are there. Either you have a great referral network, okay, who is referring you, either you have a strong brand presence. Without that, you cannot have the investor is coming in. You cannot win them, Daniel.
Yeah,
That,
I
yeah,
completely actually wanted to add one thing to what you're saying, and then we
yeah,
can get back to what you were saying. But you talked about a lot of the different channels being important. One
yeah,
concept we talk about is what's called omni-channel, which means you're touching people across all the different platforms. So
yeah,
I think in a prior state, you could only mail people physical cards and you could actually get traction and get deals. Now, if you're not touching people across multiple channels, then you're missing out on certain parts of the market. So I think that's a key part. And just to reiterate something else that Ramesh said about having a presence and having people continue to see and establish that presence. If you think about something like real estate or getting investors in syndication, it's not as simple as like, hey, I want to buy this pen, short, small decision, small amount of capital, et cetera. It's a big decision to invest with someone or a big decision to decide to buy a real estate deal. So you want to constantly stay in front of people, constantly be the expert that's pushing out good content that they go and they see and they're like, oh yeah, I see, Magnify is doing XYZ. I want to go and work with them because they're a brand that I trust. And said differently, if you don't have that stuff, I think it can be a big detriment. Let's say that you have a great relationship with someone who is looking into investing in your business, and then they're like, oh, let me go check them out online. And they're like, oh, their website looks like crap, or like, they don't have any of these channels established. Like I liked the guy, but now I'm 50-50. So I think you want to have a comprehensive strategy, and that's why brand building is so important given the longer deal cycle and needing to be omni-channel. And then Damien, I saw your question about omni-channel, so I'll just touch on that since I was speaking to it. I think you really want a mix of both physical and digital channels. So traditionally in real estate, people would go through the physical channels, cold calling, sending postcards, mailers, etc. That's still a key part of the business. And if you're not doing that, you're missing that prong. However, a lot more people are moving towards the digital strategies. Yeah, even as a syndicator, people, I think, were mailing letters and, I think it was a lot of cold calling as well to find accredited investors. now people are utilizing more digital channels. So whether that's like SEO or SEM, SEO being organic growth and presence, or SEM, people doing paid marketing, search engine marketing, trying to actually get leads across a ton of different platforms, from Google to Facebook to Yelp to your website to LinkedIn, et cetera. I think the digital presence now is becoming just as important, if not more important, than the physical.
Lovely, very well said, Daniel, And just adding to, on a omni-channel, I think, in latest, in today's world, there are many omni-channel which have newly generated. So consider like, going on the newsletters, which are specifically related to the real estate investors. So be on that newsletters, be a sponsor on those newsletters, specifically a sites, and publish your content. Get a quick visibility of your content through that. Get on podcast, industry influencers who might be from a different industry, might be, that they are your audience. Let's say a business coach, obviously business coach, all our SEO, CEOs, CTOs are being, connection with them. So if you be getting along with them on those channels, that's another medium how you can really have traction from that. So podcast, through a podcast, you can get that kind of a thing. And apart from that, as Daniel added, then LinkedIn is a one most critical channel where, I would definitely say LinkedIn and Twitter. Obviously, there are high net worth individuals spending their time, so those couple of channels definitely we can focus on to go on. And Facebook is too, because, if you look the age group, maximum investors are not young, but if you look around age from 40, 45, 50 people, they are like, baby boomers, they are on Facebook, they are active there. So that's why, that particular portion is very good for targeting as well. Daniel, I think that could be really helpful, probably. I hope, Damien, that is a helpful information for you. So that being said, Daniel, I have a question for you.
Sure.
How has the lead generation landscape changed over the past 5 years? Okay. And how is it evolving? What challenges have you faced and how did you overcome of it?
Yeah, definitely. So for the first part of the question, I think I just touched on that a little bit. So I
Mm-hmm.
think traditionally it was more physical channels, it was more relationship driven. You wouldn't even need to have a website or have a digital presence, and people could still trust you. I think
Mm-hmm.
that's rapidly changing, because even if you connected with someone through a relationship, they still want to see that you have a digital presence. So I think it kind of goes hand in hand having both. And then moving forward, I think it's going to continue to evolve. I mean, we talked about AI disrupting the space. We talked about digital channels becoming an even bigger part of the picture. So I think you want to have a digital strategy in
Mm-hmm.
conjunction with your physical strategy to make sure that you're being truly omni-channel and appealing to all the investors. And keep in mind, some people respond through different mediums. In our business, it's funny, like if you send an email blast, some people never respond. Some
Yeah.
people, they only respond to email blasts. Some
Yeah.
people only respond to voicemails. Some people only respond to letters. So again, you want to be, there's no silver bullet in this business. You want to be utilizing all of the different channels and then hopefully speaking to the market for the people that want to be reached out to from those channels. So I think that's a key part. In terms of challenges and how we overcame them, I mean, I think a big one is that it's expensive and it takes time and it's tough to get quality leads. I think those are the biggest things. So it's tough to say, hey, like we've been traditionally physical, now we want to go more digital, and you just turn it on and it goes like that. You got to be patient. You got to know that it's going to take some investment up front. You
Mm-hmm.
got to know that you're going to have to iterate a bit to get the approach exactly right. You got to
Mm-hmm.
have ways to filter for quality so that you're speaking to the right set of leads. So I think
Mm-hmm.
those are the three big challenges, because sometimes people will say like, "Oh, this is too much of a hurdle up front to go and want to do this," and then they never do it and they're missing out. So
Mm-hmm.
my advice would be to figure out how to kind of dip your toe in and start doing it and start iterating and start building that presence, because it's
Mm-hmm.
going to take some time. And
Uh-huh.
that's how overcame it. Was we were able to, I mean, working with Ramesh's team is great. I mean, it's obviously not as expensive as hiring someone in California. So I think that helps with the expensive element. In
Mm-hmm.
terms of taking time, we've been iterating a lot on our approach and
Mm-hmm.
continuing to refine the investment criteria, or the targeting criteria, I mean. And then
Uh-huh.
finally, in terms of the quality of the leads, we've also been refining the criteria to make sure that the people meet exactly what we want and tweaking a lot of the copy and the messaging and whatnot.
Mhm.
So overall, of course, there are some hurdles to getting
Mhm.
into digital marketing, but I think if you're able to move past those three things and
Mhm.
continue to be, true north in your vision, then you
Mhm.
can get really good results.
Lovely, Daniel. Just to add on to that, Daniel, I have like, how much time it has took you to basically, from a day one to start point to generate that accredited investor lead and actually to find, okay, this is working, this is working, this is magical. You come to know, okay, this media is really making an impact to you. And what was that time frame basically? You think, Daniel?
Yeah, probably. I mean, I think it depends on where your brand is at currently, but
Okay,
it
lovely.
feels like you should give yourself at least 3 to 6 months. I mean, just doing a couple posts for 2 weeks, like you're not really gonna get traction,
Mhm.
especially if you're a new brand. I think it's something you want to be doing on a regular basis to start to get some traction.
That's lovely. Great. I think, Daniel, I must say to you, you are the one who basically going through each and everything. It's a real-time experience. What you know that, okay, I have faced this, I know this work, and I need to give this much time. So I really love that what you answer on that particular thing. Yes, to you now, Daniel.
Definitely. Yeah. So switching back to you, I'm curious, how would you say you win investors in today's rapidly evolving world with all the competition out there?
I think, see, most of like, as I said, digital world is evolving every day. You really need to be on a toe all the time in order to win this competition. You have to keep trying new things. Probably you like, a month back, you have a different strategy. Okay. After a month, you really need to come up with a different strategy. You need to have n number of a multiple funnel. That is the one way, Daniel, you have to go. You cannot say that, okay, I have two funnels out there. They are enough. I can have enough investor. No, not at all. You cannot stop and one particular funnel. You should have at least 6, 7 funnels which are out there, which are talking about it. Okay. So why they should be, as I said, the more content out there, you're gonna see people are gonna watch that across, Every time they're gonna search across, you have a lot of content out there, you want to be the first one which will pop up for that. That is the reason you have to really create a lot of content, lot of funnel across, and that too not like you created, let's say, 3 funnel now, and after 2 months you said, hey, look, I am now expand on this 2 funnel. I mean, there are a lot of competition out there. Meanwhile, you created a 2 funnel. There are 3 guys out there who already created 6 to 10 funnels to lash out and get this competition in. So add on to that, Daniel, you have to constantly build out new lead capture funnels with a new content idea, with a burning topic. What is trending now? What is going on? What is current issue is, which is related with the investing. You have to create a content on that. Get the eyeballs to that. You know that that's the problem, and you are creating a solution for that with that particular content. So investor get hooked to that, Daniel, and that's how it work around. So I'll show you a piece of like the funnels, learning capture funnels. We have to create it across on the screen. Vishaka, can you get that on the screen, please? So this is one particular funnel where need a clarity on how to invest in income fund, save research hours. Vishaka, wait there and just stop. You save your research hours. We have got covered. All need to know this 30 point on our checklist to get started. Download this. If you look at the right hand side, if they wanted to really fit out this, they need to give this information. If they need to give this information, you know that, okay, this accredited, non-accredited, boom, you got a pre-qualified leads altogether. So it's kind of a 30-point checklist. Another one, when Vishaka, learn and grow. So this is a different altogether, a commercial real estate investment, maximize your return with the industry. Okay. This is again altogether a different lead magnet. So with a different aspect, create those kind of a lead magnet which are actually creating an impact. User or investor are searching for that information. Okay. If you create a normal content which is already available out there, doesn't make sense. Now this is a different, altogether different lead magnet or capturing thing. Learn and grow investment summit. It's a live event where you call people to be there, You interact with them one on one. Even there are 10 people, they get to know each other. It create a faith. It build a rapport. That's how, like, three different funnel I've showed across to you. Vishaka, can you? So this is the one thing. Create a multiple funnels out there. Focus on content marketing. Creating, as I said to you, create high quality of a content altogether. Pain point oriented content. What's the pain at that particular uh, your investor is having right now? If you look about medical professionals who wanted to invest, they're short of time. They don't have a time to learn about which deal is good, which deal is not good, and they wanted to have a passive income, create a content related to that. Similar with CEOs, similarly with other industry experts. So pain point oriented content creation, okay, creating a case studies, educational content, creating a blog post, doing a white papers, most of the time, highlighting the market trends right now. Those kind of a content you have to create, and that to be really, not a old content which is running across a 3 month back, 1 month back, 6 month back. You have to be really very creative with this content, because competition is huge. Everyone is coming out on the internet. Implement lead nurturing sequence. Once you get the lead into the funnel, at the end, you really need to have your CRM set up in a such a way that you are sending them a reminders email. You have a newsletter into the place. You're sending some video that, okay, this is a success story. Hey, look, this is my investor is talking about. Hey, look, this is the deal, what has happened, this is the returns, what we are talking about. It's all educational. Keep sending that information and keep nurturing that leads. So that's how you build out a rapport too. Develop targeted email marketing campaign to reach accredited investor who have expressed interest in real estate investing opportunity. Engage the investor with bi-monthly, weekly newsletters. Schedule a call with them to build a relationship, not for pitching them investing opportunity. Never talk in a first call that, hey, look, this is the investing opportunity. Understand what is his objective is. Be on the discovery call with that investor. Don't tell him, hey, look, this is what I have offered, and can you go for it? No, it's a red flag, guys. It's a red flag. You really need to understand where they are coming from, what is their objective look like, what is their past history look like. Try to talk with them, engage with them, understand where they're coming from. Then in second or third or fourth call, you can try to pitch them about your second thing. So building relationship with them on a call, build a wait list. Okay. So you don't have a deal, build a wait list. Keep that wait list on your website, on your funnels, on your landing pages. And that wait list can further be nurtured through the email sequence and all those things. Build out a investor club, investor communities. LinkedIn, go on a platform like a Mighty Network, create your investor community. The more number of investors you have there, give them education, create a pools out there, put an entertainment thing, put educational videos out there. Phenomenally help out in terms of, if you keep educating investors, they're great help. That's the way, Daniel, how to do this, I believe. That's it, Daniel.
Yeah, definitely. Yeah. And I think it speaks to what I was saying earlier about the longer deal cycle and continuing to stay relevant for your leads so that you're pushing out good content. And that when they look to actually do something in 6, 12, 18 months or 3 months, they say, hey, this guy's been sending me great stuff. I should probably connect with them because they're a market expert. And also
Mhm.
keep in mind that one of the biggest channels being Google, if you actually want to rank highly for SEO, Google has a pretty smart algorithm. If you're not regularly posting and it's not good content, you're not going to rank highly. So it's a little bit of the chicken or egg where you have to, even if people aren't liking, sharing, etc., and you have a small following at first, as long as you're continuing to put stuff out, that's going to compound over time, and Google's going to factor that into their algorithm.
Lovely, Daniel. Cool. Daniel, I have a question for you. It's a very simplified question. How did you implement a digital marketing strategy in your syndication business? That I would really love to understand.
Yeah, for sure. And I think I touched on a couple of these points earlier, so I'll keep it pretty brief. But I think really in building out the full digital presence and having a few lead gen funnels, I think that's been really big. We didn't actually have a true digital lead gen funnel before. Now we have a few of those where, X amount of people I get to the landing page, Y amount of people submit the form, Z amount of people we're going to set a meeting with. So it can be a little bit predictable in some sense if you know what's coming. What else is really good is that we're able to showcase our work to the world. So before, we weren't actually highlighting certain deal stories or case studies that we've done, et cetera. Now we really have that digital presence. If people say, oh, Magnify, I haven't heard of you, let me check you out. Have you even done a syndication or deal before? And then it's like, oh, look, here's a few deal stories. Click to learn more, schedule a call with our team. So I think it's really made our overall strategy more cohesive, so
Mhm.
that we're able to actually reach certain leads. And then Damien, in terms of email marketing to avoid getting spammy, that's a great question. I think it's you got to strike the right balance, because if you're blasting people every day or multiple times per day, they're going to unsubscribe from your stuff. So I think you want to, one is have the right cadence. Yeah, definitely constant contact or go high level is a good one as well. Some of the email marketing. So one is you want to make sure that you have the right cadence. If you're doing it way too often, people are going to unsubscribe and they're not going to like you. Also, if you're not doing it often enough, then you're not going to be relevant, right? So there's that gamble. You also want to be very personalized. So a lot of these tools now, like Constant Contact or Go High Level, you can do mail merges. Hi, Ramesh, I'm reaching out to you about your property at 123 Main Street, etc. So that feels more personalized and people feel like it's less spammy. And then the final thing is that Ramesh touched on this a little bit, but you want to have really good content that isn't necessarily spurring them to action, but that they actually just find valuable overall. So, for instance, in our business, we're not just sending just listed, just closed, here's a deal we closed or didn't close. We're also sending, here's our newsletter, here's some market updates, here's some relevant news for you. Hey, here's a free rent report, stuff that's actually valuable to the investor. If it's valuable for them, it's not going to feel as spammy. But if you're just constantly pushing your sales pitch, then that can get, I think it can be pushing people a little bit too much. So hopefully that answers the question. But yeah, overall, I think we've been able to implement a lot of these lead generation funnels, and it's been very productive for us.
Good. I think, Daniel, I would definitely like to add on diamond question, like, with email marketing to avoid getting spammy. So it is a two part of it, basically. Today's one, lot of client I have met and, syndication company, they want, hey, I want a list of investors. Okay. And I wanted to run across a cold email campaign. So it depends. Are you running a cold email campaign, or are you talking about the email which you have collected on your website through your website form, investor form, contact us form, newsletter kind of a thing? There's a two different story. If you talk about you have purchased database and now you wanted to really go ahead and push you across that through the cold email marketing, you have to have a different tool. Don't use go high level, don't use constant contact because they are not for a cold email blast. You have to have there are different tool for a cold email blast, which is email octopus, send and blue. Those are the tools which is being used for cold email blast. Okay, when you do cold email blast, there are many things you have to do it. You have to first validate the email addresses, do the validation, make the batches, get a different domain. So let's say, for example, Magnify Equity has its own domain right now. Okay, don't do the email blast from that particular domain, because that database where you're sending the email is not the data, not you have collected on your website. So if they start giving you as a spam, your domain get blocked. So big red flag on that. So the email, when you do a cold email blast, you have to open up a different domain, buy a different domain, get a different email marketing tool out there, do the data email validation out there, make the batches, check out the content which is there, is a spammy content. Don't use the word like money, 2x, 3x, get rich. Obviously, that's a a red flag content. Identify that, run the test, and then you have to run across for that kind of a. So this is how you have to run across a cold emailing campaign altogether. And if we go back to a normal campaign kind of a thing where you collect the email addresses, I think, as Daniel said, GHL, Constant Contact, Active Campaign, Infusionsoft, these are the great tool. you can utilize and go forward from there. That's look like that. I think
Yeah,
we need
yeah,
that
definitely.
Facebook ads, look for more info on our investment. So I mean, there's like, emails which you have collected on Facebook. So you have collected on Facebook form or on your landing page? That is again a question, because when you collect on a Facebook form, that is not collected on your website domain. So it is again that tool where you push this data, that term as, bulk upload, precisely. So website, Facebook form, Diamond, it's a Facebook or website form. Cool, lovely. That's cool. So that's how it look like. Diamond, you have to have that into the place where, you get them into your website through the Zapier. So or into a CRM system. So that really not term as a, cold email list altogether. Cool. I think that being, yes, on to you, Daniel.
Yeah, so another question for you, Ramesh. Can you share some successful examples of how real estate companies are using tech to enhance their brand perception and investor confidence overall?
Yeah, obviously, I think, we've been in last 9 year of a time period. We saw many brands who have really used the technology and grow to the next level. So, Vishaka, if you can share a screen, many of you might be knowing Grow Capitus, Neil Bawa. This guy has immensely utilized the technology. If anyone knows, 25 plus team size only for content and marketing and digital marketing over a period of last 5 to 6 years, he has grew up to such a big level, dollar 700 million in asset, 480 unit, more than 1,000 plus investor he is having. And it's all dev to, a dedicated content marketing team, dedicated Facebook ad team. We have worked with, like, Neil Baba as well. So we understand the entire journey and giving a focus on that aspect. This is how this specific brand has been grow up. Now, if you look around, accountable equities, once again, this is one of our client. If you see, like, 360 active investors doing podcast, webinars, live event, everything, 8 successful funds, 630 resorts. So this is again a brand has really done quite a bit over a short period of a time period. Vishaka, one more, could you go on? Massive capital, Austin, Texas, 2 years of a time period. He's one of our client again, 175 million on their asset management side, and 45 million equity deployed, 1346 units under the contract. Such a 2 years of a time period. Today, they started offering their coaching program as well. So digital media has really impacted massive capital in a bigger perspective. There is a one more good example how, like, use of a digital media can take to the another level. Another client of us, like, Terra Equity, 183 million in asset. Before we came into the picture along with them, Daniel, they were using traditional methodology, making have the data, making people call. Cost of acquiring a one investor lead was $2,000. Today it has changed entirely. Look, the 2,300 unit under their management altogether. Yeah, we have reduced down their cost of lead somewhere $150 of an accredited investor. This the great story of this brand as well. Now the another one, storage unit. It's a fund again. Daniel, if you look around 200 million under the asset, uh, we started with their website. They were not having a website at all 1.5 year back. We built out the brand, we built out the content, we built out everything for them. They are their list is now more than 500 plus investor list over a period of a years. So that's the some few really a successful example, Daniel, which have really leveraged the technology and took like the stuff to the next level altogether, Daniel.
Great.
Yeah. So I think, Daniel, I have a question for you. What advice would you give to someone who had just started out a syndication and looking to attract a capital altogether?
Yeah, definitely. I think that's a good question. There's a few things that I would touch on. Obviously, like we talked about before, it's a little bit chicken or egg, and I think it's a high barrier to entry to actually get going. So I think
Mm-hmm,
you want to get certain things right up front so that
mm-hmm,
you can go and do it. The first thing you want is you want to have a thesis or competitive advantage for why people should invest with you. There's a lot of
mm-hmm,
syndicators that don't really have a thesis on why they are the right team or what they're bringing that's different. And it could be as simple as like, hey, I really know the Dallas market and we're investing in value add properties where we can double the rents and then grow cash flow and flip it for higher. But you got to have some sort of competitive advantage versus just, oh, I want to get into real estate and I'm going to go find a good deal. You want to have some sort of thing that's driving the deals that you're picking. So people, it's like if you have a stockbroker, you want the stockbroker is going to have a thesis on what the best stocks are and why he's picking those, and that's why you hire him. Same thing with the
Mhm.
syndicator. You want someone, you want to have a perspective on why you're going after the deals you're going after. So I think that's a big one. The second one, which is kind of related,
Mhm.
is you want to get a really good deal to start. And of
Mhm.
course, that can take some time, but you don't want to syndicate your first deal with like an okay deal. And it's not like you need a slam dunk deal, but you need at least a double or a triple because it's really tough, especially early on, to get your investor trust. So
Mhm.
if you're coming in with a little bit more cushion with a deal that's a really good deal on the numbers, then you have a little bit more wiggle room and you're more likely to actually do a good job. And if you do a good job, then you're going to get more leeway with your investors. So again, you want to have a thesis for why you're buying the deals you do, and then
Mhm.
go identify a good deal that meets that criteria. And then also on a related note, you want to invest in a market that you know well because you're truly going to believe in that investment, right? So I wouldn't go and syndicate a deal in, Kansas, for instance, and tell people that I know exactly, even if the cap rates are great and it's a great deal, I'm not the expert out there. So it'd be erroneous of me to say, hey, this is the right investment. But if it's something in core Bay Area, something I know well, I
Mhm.
feel fully confident putting my full weight behind the deal. And I think
Mhm.
that's a key thing is people want to trust that you are the right guy and you really believe in it and that it's a great deal overall.
Mhm.
The next thing I'd say is you want to strike the right balance of investors.
Mhm.
So something they say a lot in syndication is sometimes the people that invest the least amount of capital have the
Mhm.
most amount of pain and questions. So if you have just multiple people spattering 20K, it's going to
Uh-huh.
be a lot of relationships you have to manage.
Mhm.
Ideally, you have a shorter list of investors that are investing at least 50K, and they're people that are good people that aren't going to be, really working you and asking you constant questions. You want to vet the investors just as much as they're vetting you to make sure that it's a good relationship overall. Because ultimately you're going to be reporting back to them, you're going to be updating them on the project, and you want them to be someone who's going to work well with you and help you achieve that result. And then the final thing I would say is you also want to have a structure that rewards yourself. I think
Mhm.
early on, some people you can give up a lot of the upside in their first syndication, which is totally fine because they want to prove to their friends and family that they can go and do it.
Uh-huh.
But you have some sort of clause or waterfall in there where it's like, hey, if we completely hit it out of the park and triple our returns or whatever, like I want a bigger piece of the pie. And I
Uh-huh.
think building that for yourself, that's how you can really grow your own equity as a syndicator is if like in the big upside scenarios, if you truly hit it out of the park, then you're compensated and they're going to be happy with that where it's like, okay, sure, if you go and triple the value, yeah, you can take more of the pie. And
Mhm.
then of course in the lower scenarios, you want to be giving more value to the investors because they need a baseline level of return for it to make sense.
Absolutely, Daniel. That's a lovely message, I must say, Daniel, what you shared across to you. It's a great insight, because that's what a syndicator is needed who is starting their thing, and even who has experience as well can learn few things from your input because you have a different investor perspective which you have deal with, and another syndicator who might have dealt with 100 investors. They have a different perspective altogether. So that's really helpful, Daniel, altogether. So I think that being said, Daniel, it was really great that we have done with our a conversation point. Guys, anyone here out there who wanted to ask a question to Daniel, to me, we would love to answer them and go from there. So they can unmute themselves and they can ask a question. We'd love to answer them. Anyone have a question? Richard, yeah, I mean, you can go ahead and unmute yourself and you can ask a question.
So at this point, you're talking about waterfalls. When my company first started doing the syndications about 12 years ago, we got onto some of the crowd platforms. And standard at that time, it was 70-30 split, 8% pref. Are you seeing now that the market's tighter for getting investors to the table, are you seeing more generous splits or people down at like a 10% pref, 80-20? What are you seeing out there?
Do you want to speak to that, Ramesh, or you want me to?
Daniel, you can take on that. I'll take it after that. Yeah, go ahead.
Yeah, that's a really good question. I'd say that's kind of the standard waterfall expected. I have seen people go to the 10% or go to 80-20 and kind of be more pro investor, but I think it really depends on the specific syndicator and their experience. I think probably the 8% 70-30, if it's your first one, that people might even push back on that and they might say I need at least the 10 or 11%. So I think that's a key thing is it's probably that's the rough structure, and then people are kind of tweaking it slightly around it. And then I think it depends on where the syndicator is in their life cycle. If they're a really good syndicator, then maybe they're only giving a 6% preferred return and they're getting even more of the pie. So I think that's a key component. And then finally, I think it also depends by market. So if I say I'm giving you a 8% preferred return in Kansas, that's different than an 8% preferred return in Palo Alto because the returns are lower in Palo Alto. So it's going to be a bit deal specific, but I think that's the kind of the cookie cutter structure that people are templatizing and then building around.
Just to add on to that, probably I'll definitely say, Daniel, look, the investor who's coming in, how much equity is going to put across, that is again one negotiation point which always syndicator and investor is having all together. If we get a big piece of a pie, like, hey, I'm investing 2 million, one investor you got who is putting across the whole thing, then he is the one who hold across a decision making position and say that, okay, look, now you can negotiate over there. And on institutional investors who is coming up with 50K, 100K, then you have altogether a free hand to deal with that, whether it is 8%, whether it's 6%, how you wanted to keep it. So it's a type of an investor again, and what kind of amount you are taking from them. Depend on that side, you can decide altogether that how you want to keep it, 80-20, 10%, 90, all that depend upon that size.
Yep.
Cool. Anyone is there? Richard, Shane, anyone want to?
Sure, I'll jump in here. This is Richard. This has been great, guys. I can't say that I've been 100% able to focus. I had a few things I was involved with, but I know you're pushing the idea of creating content and be a content generator. That can become kind of a job in itself unless you hire an agency or a group that does that for you. And it seems like attention is the new oil. It's the real byword that gets the job done. Everybody's awash in information or content, and focusing on the person at the right time when they have intent to do something is kind of the new strategy. It seems like where you're tracking somebody's, search or other exploration that's going on. So you're targeting them with your content, or you're repurposing somebody else's content, sharing ideas that way. So I'm just wondering whether needing to start from scratch is really the place for somebody newer, and maybe it would be better to either collaborate with somebody that's already a strong engaged sponsor or a content generator, and either appearing on their podcast or co-venturing with them might be a better, quicker way besides, just the landing pages and website that you mentioned earlier.
I think, Richard, definitely, I must say this is a really great question, because I know everyone feel that, okay, if I wanted to generate a content, if I wanted to do this is a full-time job. And as you said, hiring a full-time agency who is actually having the expertise in this, not the company who don't know what is passive investing meaning, what is a syndication, what is a multifamily investing look like, or what is a commercial real estate investing look like. So you really need to have a people who understand this domain and get them on your side and start pushing that content creation methodology, Richard. That is the one thing you require. Secondary, if you go on the other people's podcast or another channels to go out there, definitely that create an impact. But at the same time, that audience remain there only if you are not collecting anywhere their email address or their phone number or anything, because you're going on their channels, okay? it create a visibility. If they provide a content to you, then you can definitely use that content, repurpose that content, or cut that into the pieces and push it on social media, Richard. That can be really helpful. But parallelly, you really need to drive that content who is watching that to the funnel. So they get into the funnel, because just showing them and not giving the call to action will not make sense, Richard. So obviously, first thing is you really need to have a dedicated team who is doing this for you, because your job is not a content creation. Your job is not doing a digital marketing. You are a syndicator, doing a deals. Talking with the investor is your focus area. You should do that, and this should be given to the people who are expert into this. So they give up, and they help you out to grow your brand. Don't depend on someone else. Build your own system, build your own content creation methodology, and go from there, Richard. That would be my answer to that. I hope that answer your question, Richard.
Okay, yeah, no, that's very helpful. Thank you.
Cool. Lovely. Anyone else who wanted to have a question?
No, this is Terry. Yeah, just wanted to say that appreciate you putting the presentation on. Great content. Enjoyed listening to your guest, and look forward to connecting with you next week.
Hey, thanks a lot, Terry. Surely. I'll see you on the call. So there is one more question, Daniel, from Reddit, I think. How much weight would you give to engaging with other people's content as a part of digital brand building strategy? A lot of strategies involve posting consistently across multiple channels, but isn't it equally, if not more important, to regularly engage, be social on social platform? So Williams, I think how much weight would you give to engaging with others people content as a part of digital brand building strategy? Obviously, it should, you really need to identify on which content you go and comment or like or share. The one who has authority, probably, who is really have a value in his content. You're going there, commenting over there, might be adding your stuff parallel to that, sharing that content would really make a sense. But a content which is a basic content, doesn't have a lot of share, a lot of follower, no authority, doesn't make a sense to go and putting comment or sharing that kind of a thing. So that is the answer to first question. And then the second one is, a lot of strategies involve posting consistently across multiple channels, but isn't equal, if not more important, to regularly engage, be social on the all the platform. Obviously, we really need to identify the 3 or 4 platform where our audience is. Okay. And on that platform, you really need to be there, and then go from there all together to engage with them, put a comment out there, and share your thought on those particular contents and everywhere. I think that's what is needed altogether, Williams, for being on a social. You want to add on it, Daniel?
No, I mean, I think you covered it well, but I'd say I would actually say it's more important to be posting and building the strategy, or sorry, posting and building content yourself as opposed to commenting on other people's stuff. If you're liking or commenting, it's almost like it can get lost in translation and it's just long in their feed of all the comments. Whereas if you're actually the market expert and you're the one who's the thought leader posting the content, I think that carries more weight. So I agree that it's important to definitely engage and also interact with other people's content. But I think if you have to pick one thing, definitely the one posting the original content is the most important. So I'd put more weight to that. And I think all activity is valuable.
Absolutely, Daniel. So that's what, if let's say, a top industry person might be out there, and if you comment or you share his content, then you could, or you go and comment your product, particular lead magnet out there. People are going to look across, and from there you can get the visibility. So identifying on whom you're commenting or sharing, that's the important factor parallelly. So I think, good. It's altogether a great session. Anyone have a question? So we can answer that, or we're good to wind up this. Guys, Daniel, I must say thanks a lot for your time today. It was a fantastic session we had. I think everyone who is out there has a value add information in our today's webinar.
Definitely. Yeah. And thank you, Ramesh, for putting it together. Very useful stuff and great working with you.
Hey, thanks a lot, Daniel. Bye-bye. Thanks a lot, guys.
Thank you, everyone.
Bye-bye.